everybody. Hope everybody is doing well. My name is Chris. This is Wheelhouse Trading and welcome to the Wheelhouse. So, ouch. Captain BUZZKILL, CPI Data report comes out yesterday morning, early in the morning. And don't tell my girl, but in the pre-market I was down like 40 racks, like boom. And then it got worse throughout the day. A lot worse. So yeah, I felt it. Everybody felt it. In fact, every single market across the globe felt it. Just like when I made that video, bullish pivot, rally inbound. Well, yeah, I could see the momentum coming. Why? Because we have higher lows on the indexes, including Bitcoin. And every economist out there believes that inflation is going to tick down. Several videos back, 3 or 4 or 5, I don't know, I had said, I think that inflation might tick up and tick down. I don't think it'll be a knee-jerk thing where it goes way up. But I do know a little bit about this particular topic. And, you know, it takes about 6 months from the time that they start tightening, the quantitative tightening. And they started in March. So March to September is 6 months. So at a minimum 6 months up the road, which would be right now, it would start to subside. Best case scenario, 6 months. So it's only to this point that it could start to get better, if you know what I mean. So yeah, you know, that's why in that video I had wrote bullish pivot, rally inbound, and showed you all these technical charts. But how many times did I say in the video? At least 10 times about stop losses, capital protection, how to do it, where to do it, why you need to do it. Why? Because I've been around the block about 500 times. I started this game in 2004. I went full-time in 2014. I've seen it all. Now, I've seen most things. I never lived through a pandemic, and neither is anybody watching this channel. That's a new one for us. But I have been through quantitative tightening. I have been through quantitative easing. I do know how a Fed can crash a market, and I do know how a Fed can prop a market. And I do know how the politics work, and I do know how a lot of things work in the markets. And that's why I said we don't know how far it could go. It could go 3 days, 3 weeks, or 3 months. Unfortunately, it was on the shorter side. It was 4 days. And, you know, the Fed knocked us out the game. Now, if you were in my group, you know that if you're a Jedi, you get my alerts. And my alerts are savage. They're keeping you up. I mean, I'm on it all day long. In fact, let's just take a look really quick. Okay, so here's just a few alerts from, you know, just a couple days back. Sushi, crypto, looks ready to run. Blue HMA on the daily. Bitcoin, daily HMA. It's go time. Then I wrote on September 10th, and we're on, what, the 13th? Okay. Now that you have the blue HMA, which is this blue one, but we're on the minutes, but I was showing on the daily. Now that you have the blue HMA on the daily for Bitcoin, you can simply hold it either till it turns red for the whole ride, or sell when the 9 crosses down through the 5, or just hold, raising your stop loss on each pivot low and let it ride, okay? And look, we still have, just so you know, a blue HMA on the daily. However, in this video, I do want to talk about how we broke down through this support with a body close, because this is the new candle. That's not good. Next stop would be, you know, right around this 19,000 area. So, yeah, we'll have to talk about that. But, you know, going back through these alerts, look, Hood is ready for a buy. It went up $1.30 after I mentioned that. I mentioned this in the comments last week, but wanted to put an official alert out. Just in case I didn't make an alert, wanted to remind you about Netflix. It was crossing on the daily. Some notable mentions, you know, Grom, BBIG, SGML, all these were up 14 to 30%. A Deutsche Bank early in the morning upgraded NEO to 39. I'm just showing you the alerts, like how I'm on top of it for you guys, okay? Here we go, approaching intraday breakout, possible resistance, Bitcoin at 22,484. That was yesterday when it made it up there, and then it kind of created a base, and it finally made it all the way back up there to that top, and it did get rejected before I went to bed last night. This is yesterday. Attention, Jedis and Padawans. We entered correctly, and portfolios are up. Technically, it should still go up. However, nothing can ruin a good party like the Fed and a poor inflation data report. So I suggest placing a stop on all your profitable positions above break even at a minimum, or on the 9 EMA tonight, to make sure tomorrow doesn't take all those gains from us. See, I got your back. I'm looking out for you, okay? Now, look, if you get stopped, okay, and you have this nice thing going. Let's just go look at the Dow, because the Dow got wrecked, right? Where's the Dow? All right, let's go over here to the daily. Okay, so here's where it's quite the candle. Okay, so over here, I told you it was going to come down. Here, I told you we had a bullish pivot, could go 3 days, 3 months, 3 weeks. We didn't know. It went 4 days. Right at this resistance, came down. CPI data ticked up. Every economist out there thought that it would come down. I can see the momentum from the higher low and accumulation in the volume and bullish behavior in the charts. And so we get in there, but we put our capital protection, we put our stops on there. And this is why, because you never know. And you don't want to lose the money that you made the 2 days before. So I got stopped on a stock I didn't want to get stopped on. I have stops on a lot of things. DocuSign, ChargePoint, Coinbase, PayPal. I got stopped on PayPal at $95.18 today. It was actually holding at $95.83. And I was praying it wouldn't hit the stop, but towards the end of the day, it hit the stop. Now, when I go look at PayPal, I'll just wait till it comes down, and I'll buy again at a better price. And that's the name of the game. Some people, they want a dollar cost average, and I think maybe because they don't know technically how to enter maybe, and it's just easier to like back it down. Whereas I know how to technically enter, so I hit it perfect, because I know that if you hit it really good on the entry, 80% of all your future problems go away. Therefore, when I set the stop on PayPal, I got stopped in the profit. So even though I lost a lot of money today, it's paper losses. And I have quality companies. Microsoft got hit. Nvidia got hit. I got both of them. Google got hit. Apple got hit. I got all of them. Whatever. I want to accumulate. I want to buy more. So you might have to, adjust in this volatility and take it right and set your stop. And maybe you had a little bit more the day before. Maybe my PayPal was up, just say, maybe it was up $2,000, and then it got stopped at $1,500. Okay, well, I still got $1,500 plus my principal. To me, that's a win. Okay, then I can just wait for this thing to do what it's going to do in the market and rebuy PayPal, because I do want it for my long term. I just have to work with the market until it decides that I don't get stopped out for at least 2 weeks, which hasn't happened for a long time. So I'll know when that happens, we're really starting to move out of phase 4 into phase 1. We're starting to things are getting better. I'll tell you right now, the way this works, and I've broken it down over and over and over and over. I broke it down before anybody even mentioned recession on TV, I was telling you guys over a year ago exactly how this would happen. Then I walked you through the crash before the crash happened. In fact, I was just watching those videos. Before it even happened, I have the charts on the screen as it's still going up, letting everybody know what was going to happen. Lo and behold, exactly what I said would happen. Then I told you about the Fed playbook, how historically they've been doing the same playbook the whole time. So this is all part of the process. And entering technically, getting stopped, and taking your profit and just rebuying it the next time, maybe it'll be a better price. And then at some point, what's going to happen is the inflation will tick down, and the hawkishness of the Fed will slow down, okay, from 0.75 to 0.5, and then maybe it'll go to 0.25, and then that's going to help, okay? But what's really going to help is when after all the bankruptcies, foreclosures, and suicides, and all the drama that's coming, the real estate crash, all the stuff that's coming, because this is how it works, guys. And sorry to sound like Captain Buzzkill over here, but it's just the way it is, And after all that is settled, what happens is the Fed and the government will go back to easing, and they're going to do it in little baby steps. So the first thing that they're going to do is they're going to want to get the labor market back, okay? And so one of the ways they do that is they work with like the colleges and the employment departments in the counties, and they do programs, like incentive programs. And what they'll do is you'll own a business. Let's say you're a business owner and you need employees. They'll actually contact you and say, hey, I have 4 guys here. We'll pay for their payroll for 6 months. And you don't have to keep them if you don't want. But please give them a shot. And that'll be an assistance program for people to get a job, to stimulate the labor market, and for them to keep the businesses flourishing. That will be a little step 1. It'll be baby steps before they get into, pushing the button on the money printer, which is later up the road, which they'll have to do because the only way they can dig themselves out of all these problems is by pressing the button on the money printer. Just so you know, and I'm just telling you straight facts, one of the only ways that has always pulled us out of recession is to lower interest rates. So like I had said before, way before the crash and way before they started raising rates back, in I think it was 2021 summer, so maybe about a year ago, I was saying, when they say that they're going to raise rates 3 times, or they raise rates 3 times, it's a signal to Wall Street to pull their money out. So they get on TV on Bloomberg up here and they say, what are you doing? Are you going to cash? Oh, no, we're not. No, they are, because I could see it in the volume. They pulled $6 trillion out and we got caught with that sucker, right? So basically, this thing takes time, and until they get to an easing process, it's going to be volatile. So you want to play the game, and you want to know the rules of the game, because you can't win the game unless you know how the game is played, okay? And so you have to enter technically, and you have to have your stop, okay? And just like PayPal, I maybe didn't get all of it, but I got some of it. That's a win. Then I re-enter and I do it again. I got 30 positions. They all have stops on the 9 because I entered technically. I might get stopped tomorrow on some of them, but all of them will be profitable. Now, some of them I don't have stops on that are in the red. There's some that I'm not. I'm still like accumulating, and I'm okay with buying the next time that it kind of pivots down and does one of these. I wanted to get more, so I'm trying to build positions on some, but some I'm trading. So I have an investment, I have a swing, and I have a trading. And I do, different things. So on the investment, I'm looking at more like, I'm really trying to, get it down here and hoping that this goes blue and I'm above the 200. I get blue ribbons, we go to a bull run. Okay, investing. For the swing trading, it's like the cloud, when the cloud goes blue, I buy it. When it goes purple, sell it. And I just do that over and over and over and compound it forever. And for the trading, I'm way back doing the same method, but on the 5-minute, okay? And mainly day trading crypto. Today, I'm filming this the day before you see it. To me, felt like a capitulation day. When you only have 3 stocks in the S&P 500, okay? You only have 3 green stocks at the close, and you have 0 stocks, 0 companies in the NASDAQ 100 green. That's what a capitulation day feels like, okay? Now, why did it drop so hard? Okay, it dropped really hard because markets overreact, okay? It's like a pendulum, okay? I've already explained this. You have the line in the sand. Let's just call that this 200, okay? Just so we can get a visual. I'll just walk you through. So you have this line in the sand, right? And above it's bullish, okay, bull run. Below it's bearish, bear run, okay? And the way the market works, because everybody has different systems and styles and methods and different time frames and indicators and all this stuff, and they're in different time zones and different, amounts of money, and they follow different things, and it's erratic, right? So what happens is it overextends, and it's overbought, and it rallies way up, and it rallies way down. But this is the mean, reversion to the mean, okay? So right now we're below it, and, once you get above it, it's going to be good. What I'm saying is when the market gets excited, it overreacts to the upside. When something should go up like 50 cents, it goes up like $3.50. Okay? When it comes down, and it should come down like 50 cents, it goes down like $9. It's just an overreaction, okay? But it will revert to the mean, okay? But, you know, when every economist and everybody thinks that inflation is going to tick down, and it actually ticks up a little bit, you know, the market really shouldn't be that surprised, because they should know, if they went to school like I did for degrees and this kind of stuff, they should know that, you know, when they get to a quantitative tightening process or sequence, that it takes a minimum of 6 months to start showing up in the inflation data. And what drives me crazy is that they should also know, by the time it gets to the grocery store, inflation, like your meat and your eggs start going up, that you're looking at a long process. I'm talking 5-10 year kind of process. And it was already in the supermarkets, and this Captain Buzzkill was claiming transitory. Mrs. Transitory. Okay? Mrs. Transitory over there. So yeah, not good, right? It's a bunch of BS. Inflation never has really been transitory. I think it's so funny when I watch Bloomberg. It's like either they know the answer and they're just doing it to fill time, or they're lying, or like the people they bring on, or they really just don't know. And it just surprises me sometimes. But yeah, I mean, I even said it in a video. I expected inflation. It could come down. It could go up still, though. It's not a guarantee that it's going to go down. I did know if it goes down, we need to have those stops on there, and we need to be prepared, because nobody can prop that market up like the Fed, and nobody can break it down like the Fed. And, you know, for me to wake up to that and just see like stuff dropping like a madman, like all my trades that I had open just stopped. You know, they were, you know, profitable trades. But my personal like long-term like, you know, daily swings, I was close to getting stopped on a bunch. I only got stopped on PayPal. But I will tell you right now, it's possible that the day you see this video, which will be Wednesday, I could get hit on a bunch of them. And ones I don't want to get hit on: Airbnb, Coinbase, Charter. I got good prices on this stuff. Disney, Amazon. Yeah. But you got to be non-emotional. You can't be emotional in a volatile market. You have to be a savage. You got to literally get up off the floor, and you got to get back in the ring, and you got to knock that sucker out. And then you got to take his money. It's a hit and run. You need to jack him for his dough. Okay? Smash and grab. That's how we do. We get in on the momentum, we get out on the stop, and we got the motor running outside. And we come out with the cash, baby. That's what we got to do. It's volatile. We got to know it's volatile. We can't be emotional, and we need to be savage. They're being savage with us. They're going to crash that real estate market. People are racking up debt on the credit cards. That's going to be all bad. I guarantee when that inflation report came out and people had their homes listed for sale, I guarantee everybody and their real estate agents are thinking to themselves, we better lower the price of our home. And there it begins. And that is why I just sold my waterfront estate. And I'm living in middle frickin' earth right now. Yes, it's almost a 4,000 square foot house, never been lived in. But for me, it's small, and I don't like it, and I feel like I'm living in hell over here, and there's my Bentley's getting dusty, and I don't like it, you know? So, but I took a sacrifice because I want to buy 30, 40 homes when it hits the fan. You know what I'm saying? That's the plan. And then I'll put myself back in the water. So it is what it is, you know? You got to be savage. You got to be non-emotional. You got to be logical. You got to be smart. You got to be a savage, okay? Because you will get eaten up and taken out and thrown out, spit out, and shit out if you're not a savage. So you need to be one. You cannot be emotional. You need to get in technically properly. You need to get out with your money, okay? Don't be buying in the dip. You need to buy in a momentum, hit it right, and then get out. Smash and grab, baby, okay? Now, we talked about overreaction. Talked about a capitulation day. We talked about how our administration keeps printing money. Oh, we didn't? Well, we don't need to because they just keep doing it. This Inflation Reduction Act, BS. I looked through it. That's going to do nothing for inflation. Let's see. People think that inflation won't ever come down. It will. It's just going to take a long time, and we're being a little impatient. It's actually coming down. It was higher 3 months ago. It's just that the way the markets work is everything. So the way that we're trained, like when we get like licenses and we're brokers and we work at a trading desk, things like this, you're trained a certain way, right? And the way the markets work typically when we look at a stock is there's a maturation cycle, okay? And you'll hear on TV or you'll hear people talk about acceleration and deceleration. That's all part of the maturation cycle, okay? So there's a stock over there, and it's a bargain basement. What did William O'Neill call it? I love what he called it. It's like buying it's called a sympathy buy is what he calls it. So it's like you want Tesla, you want to be in the EV space, but you buy like some bootleg, like company that nobody's ever heard of because it's like in the EV space, but you're shopping at the dollar store. That's a sympathy buy. But back to maturation cycle. What happens is all these things rotate, okay? The markets rotate, everything is cyclical, real estate, stocks, crypto, they all go through their phases. I've gone through this a million times with you. What happens with the stock is, and let's just take Tesla. Tesla's been banging for years, right? It's accelerating. So at some point, when I first got Tesla, back in 2016 for $42, it did nothing for years. Nothing, okay? And it basically just did nothing. It went flat. And then it eventually started to go up, and it had what's called a surprise. And that's a surprise beat. The only time a stock will move up really big is when there is a earnings beat or, some form of a surprise. And I don't mean a little surprise, I mean a big surprise. It moves it up. If Wall Street estimates say it's going to be 30 cents and it comes in at 30 cents, guess what's going to happen to your stock? It's going to plummet because you did not beat, you did not surprise, you only met Wall Street estimates, and everything is forward looking. Charles Dow, smart guy, used to be a partner at the Wall Street Journal, created the Dow theory, okay? Back then there was only 11 stocks in the Dow, all right? And basically, he's got a couple things, a few things that, part of the Dow theory that I live by. And one is trading with the trend. Two is, things are forward looking. Three, the Dow is a barometer for the economy. If the economy is happy, the Dow is happy. If the economy is not happy, it's going to show up in the Dow. Is the Dow happy today? No. Why? Because the CPI is not happy. Because this is a barometer for the economy. The Dow is a leading indicator. It will lead you into a recession. And by the time all the layoffs happen, and then the bankruptcies and the foreclosures and the real estate's already crashed, and most people have lost their 401k, and the Fed is over there, I've controlled demand, you can't spend, you don't have your money, and we're still going to base our freaking information off of headline, which is supply, which we can't control, although we can control core, but we're going to base it on, these guys over there. Anyway, what I'm saying is, as we go through this Fed playbook, basically, the Dow is going to end up leading us out, okay? Just like it leads us in, it's going to lead us out. And if the Dow is unhappy, So for the rest of your life, if you're not in the stock market or the crypto market, you should still pay attention to what's going on with the indexes in the markets, okay? And, if you're really into it, you'll look at all the markets around the world, Asia and Europe and Japan and Australia, and you'll look at all of them, and foreign exchanges and currencies and stuff like that. You'll look at all of it, But, look, I know, I'm rambling, I'm on a tangent, lost a lot of money, but I'm still in a lot, and I don't have any margin. Why? Because I know better. I run that margin. There's two ways that I run margin. Number one, I run it hot and heavy in a bull run. Hot and heavy. Give it to me, baby. But I screamed from the mountaintops here on YouTube over here when we had distribution. I was like, get out of margin. And I followed my own rules, And the other time that I use margin is when I use a triple leverage bear. And that's when I made that 400 G's coming down this mountain. with margin on a triple leverage bear. Did it over here too. Made a lot of money. I've actually made more money in 2022, the end of 2021 and 2022 than I've ever made in the last 9 years in the stock market, in a bear market. Because I got my game tight. I know how to go directional. I know how to be pivot to pivot. I know how to identify the pivot. I know how to do capital protection. I know how to hold my gains. I know how to scale into strength. I know not to buy the dip. Okay? I know not to always listen to these talking heads. I know from experience to tell my Jedis that we need to put a stop on this the night before because the Fed could just ruin it for us. It's not a given that inflation's going to go down. It might. There's a chance of it for sure. And the further we go down the road, the more the chance is likely that it will go down. And I do believe that it will go down, but I also believe that it will take time. Okay? You know, back in the late 60s, we had Vietnam War. Okay? And we also had high interest rates, and we had a lot of inflation. Okay, it wasn't very long after, and that was a big crash. Okay, there was like three things. One was a war, it's a pretty big deal. Inflation's a pretty big deal. And you know, a few years after that, we had the OPEC oil embargo, and we had the Watergate scandal. And that was a crash. And then we had John F. Kennedy. He went after the railroads, and his brother Robert Kennedy went after the basically the SEC to overregulate Wall Street. That created a crash. Then we had the Bay of Pigs. Okay, Cuban Missile Crisis scenario. That wasn't good. Yeah. And then, you know, in the 80s, we had, you know, we got hit again with, you know, this inflationary stuff. We had, when I was a kid, I remember my dad is like a brilliant genius, worked for NASA. He's invented things. He was a president of Mensa. He's knows a lot of presidents and senators, and very, very smart guy. Worked on classified stuff. And I remember when I was a kid, we had this big house, and I didn't know it then, but later as I got older, my dad was paying like 20% interest on that house. I can't even imagine 20% because I'm a financial guy, and I pay cash for basically everything. In fact, I just sold my boat today, but I paid cash for that boat. It was a $130,000 boat. I paid cash for it. I paid cash for my Bentley. I paid cash for my multi-million-dollar waterfront estate. I don't like debt. In fact, I have all these credit cards because people keep giving me credit cards, and I'm like, oh, I'm going to Vegas, boom, boom, boom. And then I get home and immediately I'm like, zero balance. I can't stand it. I don't like debt. I want to be cash heavy. That's why I'm selling my stuff, because the shit's hitting the fan, and I want to buy that bottom. I want to buy the bottom, and I want to spank it. The bottom of the crypto market, baby. The bottom of the stock market, and you better believe the bottom of that real estate market. I'm going to get down and dirty on the fix and flips, the wedge deals, and even some rentals for passive, and I'm going to get myself into a little sick one in the water again, you know? But look, unfortunately this wasn't like a long pivot. You know, those big caps got wrecked, and they have a big weighting in those indexes, so yeah. I just want to show you guys something. This is one of the things that I do constantly that keeps me successful. And I've brought this up many times, and I want to keep doing it until it kind of clicks with you guys. So when the market goes up, okay, when the market goes up, your PayPals, your Teslas, your Nvidias, your Microsofts, your Apples, and you notice the pivot and you get bullish momentum, you buy to go long. But when you have a catalyst, whether it's breaking news or rejection on a resistance technically, or whatever it may be, there's lots of them, and something happens like the CPI data, which we were all prepared for because we knew it was coming, at least I was, and my Jedis, you know, I was making alerts, and I'm aware how this works, you know. So I know that that as soon as that comes out, I know immediately I need to look at like three things. Boom, boom, boom. I can read the report over the next 30 minutes, but I need to look at three important things. And if those things don't look good on a month-over-month basis, and we're not really ticking down the way that I believe that the market is going to want it to be, then I know things are going to fall. And by the time that's even registered over 2 seconds in my brain, it's already falling. So what you do is you have your stops put on, okay? You have everything prepared the night before. Limit sells, limit buys, stop losses, you have it all automated, okay? Because you're not going to be able to do a whole bunch of positions. Then you know if it's going to go bad, this is the list. See how I have them all nice and clean in one list? Triple leverage bears. This means that shit is hitting the fan, okay? SOXS went up 18.67%. I'm going to keep telling you this over and over and over until you make 3, 4, 5, 6, 700% with me. Until you do that, I'm going to keep showing you this. When the market comes down, there's an overreaction. There always is. And people know to get their money into these leverage bears. And that's what you do. You ride the semiconductor industry to the ground. I use it as a hedge play. I always keep money on the side, and when it's going to hit the fan, I put it in there. I buy SQQQ. I buy Webs, Techs, HIBs, LABD, Biotech's coming down, SPY's coming down, Dow's coming down, Russell's coming down, Financial's coming down, Real Estate coming down, Gold coming down, Cloud Computing coming down, Oil coming down. I buy it all. And this helps slow the bleeding on the day. When you have a 1,300% drop on the Dow, okay, and you have a 5+% drop on the NASDAQ. Those are big numbers, guys. Okay, those are pretty savage drops. So you want to have a plan. If you don't have a plan, your plan is to fail. And part of your plan always has to be an exit strategy with a stop loss, entering technically, trade with the trend, and make sure you have these hedge plays. And what you do here, I'm just going to tell you, because I spent $500,000 of my own money learning how to do all this stuff. And now I'm a straight savage. I know exactly how to do it. So when the market's coming down, I buy all this stuff, okay? And I put my stop loss on the 9 EMA, on the daily. Okay, when the market comes down, I buy all of this. And I put my stop on the 9 EMA daily. Every day at the end of the day, I do that. While that's happening, and I'm making triple the money on these picks, while the market comes down, I do not buy longs. I repeat, I do not buy longs. Okay? When the stop hits on the leverage bears, that means the market is pivoting. And you're going to get stopped with all your principal plus all your cash. It's going into your bankroll. You're going to check your indexes. You're going to see the pivot, and you're going to apply it all to the longs. You're going to ride the longs up. You're going to keep an eye on breaking news, catalysts. You're going to keep an eye on rejections, supports. You're going to keep an eye on all this stuff. You're going to know. You're going to be prepared. You're going to have a plan. Then what you're going to do, so just to keep things simple, market's coming down. You buy these, put your stop on the 9. The day that it hits the 9, you just made a bunch of money and you're like stoked. And then you take all that money and you buy all your longs and you run it up. And just to keep things simple, put all your stops on the 9 on your Apple, Microsoft, Nvidia, whatever. And the day that comes down, go check your indexes because it's probably pivoting, okay, to come down. And then go buy these again. And you just go back and forth. And every day you'll make money. Or on your longs, if you're a little heavier on the weighting of your long portfolio, which most people would be, you slow the bleeding at a minimum, okay? So, look, come in the Discord. Let me help you out. If you got questions, I'll help you out for free. If you want the one-on-one mentoring, you get 10 hours of that. You get all the Wheelhouse Wednesdays, which is group trainings. You get all the courses. You get the Jedi chat area where everybody talks. You get all my indicators, all the courses, of course. And, that's $99 a month. It's very worth it. But come in the Discord. It is free. And, I'd love to meet you. Yeah, I think this week, it's always going to come back to, that maturation cycle where basically, it's the buy the dip mentality. So things are going to end up coming down. People are going to be watching certain levels. It got rejected here. It looks to have closed below here. So honestly, guys, the next stop on the Dow, realistically, it's 30,149.55, and that's going to be painful. So you're going to want to have some hedges in play. And we better pray it doesn't break the low here, because if it does, we're in no man's land. And like I've been saying for about, I don't know, 8-9 months, we're probably going to go to the top of COVID, and I think we might even dip a little bit into it if we do break that low. Top of COVID would have been here, just to kind of remind you, which is basically how far we went down before. So let's pray we don't break that low, because if we break that low, it's going to be very, very painful. And you're going to want to have those stops on those longs, and you're going to want to know how to play the game. Remember, if you don't know the rules of the game, you can't win the game. And there's savages out there. There's sharks and savages like me that will just mop you up across the dance floor. There's a lot of them out there. And, you know, I'm trying to help you. They will take your money. They will get you. So you got to have that capital protection. You got to have a system. You got to have protocols, rules, guidelines, and you got to protect your money. It's easy to make money in the market. Where people have the most problems that I find is holding on to their money. Okay? It's easy to make money. Finding the bullish momentum is the easy part. For me, the hard part is the patience to hold, because I've been beaten up by Thor and the Hulk for so many freaking years, just by my ankles, just slapped on the ring, just thrown over to the state of Arizona from California. I've been through it for so many years that it's hard for me to hold. That's why I like trading, because I know I can control the trade. That's also why I don't like options so much. I use leverage in different ways, like the triple leverage, because I can get in and out of it, and I can spot momentum, and I can enter technically, and I can exit strategically, but in the end, we're going to go to a bull run, and it's all going to be good. We just got the market is cranky right now because they didn't get what they want, and they didn't get it fast enough, okay? Remember, we're Americans, okay? We want instant gratification. We're not good like that, okay? So we didn't get what we want. We got it. It was a little higher, and every economist out there was wrong, and it is what it is, man. It's going to be volatile. And we're not out of the woods, Dorothy. We got a little ways to go. So, play the game. Ride it up, protect it. Ride it down, triple it. Stop it. Ride it up, and just go back and forth. Or stay out of the market. Check in on my channel, and I'll tell you when it's safe to get in. But if you want to play the game and you want to ride these pivots, let's go, baby. Get in that Discord. So look, I'm going to leave it there. My name is Chris. I appreciate you watching to the end, and welcome to the Wheelhouse.